quite a surprise that we've seen 2 days of losses, I would say. But then again, we have been seeing some incredible gains coming through for the NSE 20.
I believe what's been happening for the last 2 days is basically a minor correction on how the market has been since the beginning of this second quarter, especially in terms of people actually cashing in on the gains and people looking at, to hunting down for discounted options, because as I believe people who are cashing in on the capital gains are basically those who invested heavily in the first quarter, and they're looking into, change their positions or strategy in how they're going to invest the way forward during the second quarter and so on. And basically also an issue of correction, because now basically a company is able to know how they're going to go, in terms of current affairs affecting the businesses, how the contracts are coming in. So basically it's a minor correction. How long it will go on is up for speculation, but I believe at least until the end of this month and the first 2 weeks of next month.
When you talk about a correction, how much of a correction are you expecting? Because obviously we have rallied quite significantly over the last while, as we alluded to earlier, Steve. So a little bit of caution coming through. But when you say correction, how much of a percentage are you expecting to come off the bourse?
I'm looking at a correction percentage of between 9 to 15%, because not all the companies, at the list that are listed will actually, significantly have any effect. We're looking at the major players. We're looking at Safaricom. We're looking at Equity. We're looking at Kenya Commercial Bank. Companies that basically make headlines and, dominantly are traded on a daily basis and have foreign keen interest in terms of their growth and portfolio. Well,
making headlines, a possible hostile takeover, and of course that's regarding Housing Finance and Equity Bank. Housing Finance has of course said no to a merger or a buyout by Equity Bank, but it seems that Equity Bank is quite looking at this thing and saying, well, perhaps we should just go ahead. So do you think that we could see some kind of hostile takeover looming?
I believe the Kenyan corporate segment is actually getting into an interesting time in doing business, especially in terms of mergers and acquisition. But I think despite what's happening, there are a lot of issues that actually need to be handled first on a legal front for Equity Bank to be able to make its hostile bid for housing finance actualize. And secondly, I think in terms of actually agreeing, housing finance, I would say that the only way they can work with Equity Bank is through corroboration or partnership. But for shareholders of Equity actually saying that they want to have more returns on the investment, at the moment they control 20%, and they want to actually actualize that more than what they're getting in terms of dividend returns. So for me, I believe it's mere talk at the moment until we see we see Equity Bank actually being able to surmount the legal hurdles, approvals by the capital markets, the Monopoly Commission, Central Bank, and the Nairobi Stock Exchange. And basically, the shareholders of Housing Finance will actually have to approve. And even if Equity comes in through a proxy fight, I think the fight will actually be prolonged, and they'll end up looking at a way of working together eventually.
Just looking at how these companies have been performing, of course, Equity Bank being very highly traded in yesterday's session. On the back of this news, we had Housing Finance gaining 6%. Would you be accumulating these stocks on the back of all of this talk about a hostile takeover and a potential takeover?
I believe the financial markets in the country is actually deepening, and the services are being exposed more to the people. We can see from Equity, it's the leading bank in terms of our customer base. So if I had money, I'll actually pile more stocks on Housing Finance, Equity, because I believe as much as they'll continue generating news in the media on what's happening, this will be stocks to actually watch, because now the key issues will be coming out in terms of fundamentals, in terms of the market share, in terms of the way forward. And I think what's coming out is the issue of debate for value, the actual value for the housing finance, because given the fact that it is the leading company in terms of mortgage financing in the country for the last 40 years. So how do you quantify the experience into monetary or pecuniary matters?
Well, Steve, there's also a race to see not only which bank is going to be cutting lending rates, but also who's going to be offering the lowest lending rates. We know that Barclays and Cooperative were the first two. We know that Citibank and KCB have followed suit. What do you make of this very rapidly changing environment in Kenya?
I believe what's happening in the financial sector through banks is basically there's a beeline for for people to actually for the banks to headhunt for people to borrow. I mean, in terms of increasing the bottom line, in terms of revenues and profits. And what's happening, for example, you can see that there are 5 banks right now which have slashed the lending rate, with the best with Citibank actually offering at 10%. What I believe is basically they're trying to show up, I mean, customer base in terms of loan portfolio to see how things are going to be this quarter, because business environment in Kenya is actually improving. We can see that Kenyans are really tired of politics and basically are focusing on business, and the only way banks can actually accumulate their profits is through loan portfolio. So it's actually going to be interesting to see how this quarter is actually going to play out.
Kenya Airways coming under pressure, down 1.7% to 57 shillings. Of course, we know that the investigation about the 2007 crash has been revealed, and it seems it was pilot error. So a lot of concerns coming through in terms of whether we're going to be seeing some lawsuits coming to the fore. A company that has, of course, been under pressure because of the oil price, because of demand, and now it seems that something else is going to create quite a lot of negative sentiment. How do you think it's going to play out for Kenya Airways, and do you think it's going to deter investors from buying Kenya Airways?
I think the release of the report wouldn't have come at a worse time for Kenya Airways, given the fact that they're trying to really maximize on improving their profits because of the World Cup. But what I believe is the releasing of the report doesn't really have a significant effect. What will have a significant effect is how that report is going to be handled, and whether the families affected and companies affected are actually going to sue Kenya Airways for compensation. How the process will be handled will be the determining factor. But knowing how Kenyan investors are, and especially in terms of key players in the market, fundamental news that actually come through the media have little effect on how the share price actually is affected at the market. So I believe the share price should actually be stable, given the fact that they've made really significant improvements in the marketing strategy, especially to cash in on the World Cup.
Turning our attention to the advertising sector now, we had Scan Group releasing results earlier in the week and showing a 36.4% jump in profits. EPS rose 1.1%, and we know that they have been issuing shares to WPP as well to raise capital. What did you make of this news?
I think Scan Group is actually being very prudent in terms of its expansion plan, because a while back they were planning to have key acquisitions in the West African region. But given the fact that for the period of 2008 to 2009 the business was really bad, they put a halt, or postponed the acquisition plans. And what the news that's coming out is basically they had to reinvest or plow their money back into something that will actually hold the money and wait for the businesses to improve. And I know that they have significant investments in the bond market, and they've also diversified the services, especially with online and digital business, in terms of how the new media is actually playing out. So I think the fact that they've been able to hold on the acquisition plans and focus more on the home market is a way that's actually showed up the bottom revenues, and this quarter and the next coming quarter will actually be pretty good for Scan Group.